It's 6 o'clock in London. It's 1 o'clock in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young, the IPO-VID Livestream, Series 14, Episode number 2. We've reached the magic round number of 80. We're 80 today. Episode 80 starts here. Plaudits to BMLL. They've launched some intuitive no-code data visualization tools for US and European equities and ETFs. BMLL Vantage gives market participants access to the most granular level 3 order book data and analytics to understand market behavior without the need to code. I think that's absolutely fantastic. In fact, I love low code, no code. We use it all the time between various exchange jobs and exchange apps in our day jobs. And actually, I have to say, there is nothing better than the whole world of low code, no code and how that's going to come together with things like data visualization to build better markets and indeed offer us more opportunity to use all of that huge data that we have out there. Speaking of people who are likely to be using that big data, Hong Kong exchanges, they've named a new chief enterprise architect. Now, Mark Carr may not be someone who's wildly well known in the world of exchanges, but nonetheless, he is an inspired choice for the position of Hong Kong exchanges group managing director and chief enterprise architect. Why is that? Well, because, of course, he's experienced in Hong Kong's leading low latency, fast settling marketplace, something that combines low latency, high volume speculation with just absolutely absurd volumes of retail participation. Yes, indeed, he used to work for the Hong Kong Jockey Club. Sounds like a very good Hong Kong exchanges hire to me. Meanwhile, the SEC. Now, they've been in the headlines this week to some degree because a lot of people thought that Chairman Gary Gensler was grandstanding, and even the Wall Street Journal came off with the incredibly epic headline, "The SEC should leave Kim Kardashian alone." I beg to differ, ladies and gentlemen. Yes, the SEC may be trying to do too much during the Gensler chairman era, and they're ending up with somewhat of a slapdash chairmanship, as indeed was essentially predicted by Exchange Invest, the daily newsletter of the board's business, all those years ago. However, when we get to the point where there's one rule for influencers and another for hoi polloi, well, down that road madness lies, even if the US does seem to have a weird plutocratic indulgence facility, it seems. Whether the shameless publicity by Gary Gensler was a good idea, the simple fact is slapping Kim Kardashian with a fine for an egregious violation of investment promotion, $1.26 million, as you may remember, including her $250,000 fee being returned. The truth is, that was an egregious violation of investment promotion. It was the right thing to do, as it propagated a very powerful message to seek out legitimate investment opportunities and showed that even tabloid favorites in the supermarket tabloids of America are not above the law. Someone who probably has not featured, as far as I'm aware, in a supermarket tabloid is today's guest, and all the better for it he is too. Olivier Gueris. The topic today is building better markets all over the world. Olivier is COO of Astana International Exchange in Nur-Sultan, Kazakhstan. He's a board advisor to Wethaq Capital in the Kingdom of Saudi Arabia and ID Plizz, a US-based smart tech company, as well as MD of Nellcôte Consulting in the UAE. Olivier specializes in setting up and running trading, surveillance, and post-trade operations for stock and derivatives exchanges. Over more than 30 happy years in the parish, he set up from scratch and/or moved, merged, spun off, or managed operations for no fewer than 7 exchanges in 6 different countries on 4 continents. And what a roster it reads like too. Matif, Euronext, the Australian Derivatives Exchange, the original ADX, the Boston Options Exchange, and Turquoise in London. After over 7 years as Qatar Stock Exchange COO, during which the market was upgraded from frontier to emerging market status by MSCI, Russell FTSE, and S&P, the Holy Trinity, Olivier moved on to Kazakhstan to set up, launch, and run operations for Astana International Exchange and the AIX CSD to become the financial hub of Central Asia and beyond. Well, talking of Astana Exchange, Olivier, greetings. Where in the world are you today?
Well, actually, good evening, good morning, good whatever, wherever you are. I'm actually in beautiful Sydney, Australia right now, where it's actually not 3 o'clock in the morning, it is 2 o'clock in the morning.
There you go, 2 o'clock in the morning. Gosh, great to hear from you in Sydney. Thank you very much for keeping the neighbours up. I'm glad you are able to join us for this call. It's absolutely fabulous altogether, Olivier. So tell me, I mean, it's been quite incredible as a ride. How did you get into the exchange parish in the first place?
Well, just by chance, as always. I mean, I studied law at the University of Paris. I hated it with a passion. I dropped out as soon as I could. I found an ad in the newspaper to go and work for Matif as a pit supervisor in the beautiful open outcry environment, and just went there. I loved it straight off the bat, landed the job, and I ended up working for 5 years at Matif. And I'm very lucky in hindsight and fortunate that I got to learn this job in an open outcry environment. I believe that's something that's totally lost today behind screens. I mean, I'm not saying I don't like electronic markets, but the open outcry was a totally unique environment. It was by far the very best place to learn about what a market is, like, to feel the psychology of the market just by looking at the face of the traders. And there's also this fantastic thing about working on a trading floor is that on a trading floor, your word is your bond. So, whatever you say, you stick to it. And that's something that's, I believe, is sort of lost sometime these days.
It's really interesting what you're saying about the floors. I mean, they were truly the ultimate lycée, grande école, university of life, and everything else all thrown into this amazing casserole of existence, wasn't it? And it was just absolutely stupefying how much you could learn so quickly, no matter where you were on the floor. So were you in one particular pit, or were you working all around the Matif floor?
Well, so I was working for the exchange itself, which mean I was on the, how would I say, on the cup side of the business. So I was a pit supervisor, and I started on the notional bond, the French notional bond, which by then was the third largest futures contract in the world after the euro dollar and the T-bond, and way ahead of Life's Bund futures. Even though everybody was following the live Bund futures, it was the leading market in terms of price direction and price discovery. But the volumes on the notional bond in Paris were way higher than whatever could be done in London. And then after that, I was in charge of the index futures trading pit, in charge of the bond options as well. And after 4 years, I eventually became the trading floor director. So I was in charge of all the quadrants.
Interesting way to learn. And actually, you weren't the only person who managed those sorts of things. I think you can think of someone who was the former head of product development at Eurex, Brendan Bradley. He actually started as a live pit floor supervisor as well during his career, one of many. And certainly it's quite fascinating for those of you who've been looking on LinkedIn recently, where obviously we're live streaming this evening. It's a great opportunity to say that 40 years ago, just 2 weeks ago, was the anniversary of the Life Exchange itself, which is quite incredible. And amazing to see how that diaspora of floor traders from the Matif, from the Monet, from Life, from all of those different markets. I mean, they're everywhere, absolutely everywhere in all walks of life.
We've spread around the world. It's very true. Like it is a diaspora. It's true for live traders, live exchange officials. Is the same thing for Matif. I mean, I could name a whole bunch of people who came from the trading floors or from the Matif offices, upstairs offices, who've done a brilliant careers in so many areas of the financial world. Well, one of them actually
Yes.
is a very good friend of yours, if I may say, is Nicolas Proto,
Yes.
who used to be one of my colleagues at Matif.
Absolutely. Gosh, that's good to hear about him. One of many. I mean, one of many. It's quite incredible. So from Matif, did you go to another exchange, or how did your career then develop?
Well, what happened is that, yeah, I did 5 years on the trading floors at Matif. I mean, it was very demanding physically and mentally and that sort of stuff. And I was just a bit of a wreck. And I said, well, listen, I need to take a break. So I decided to backpack my way around the world, which I did for a year. I took what's called a sabbatical in France, which means you have the guarantee to get your job back when you come back. And when I came back, it was just at the time when DTB was starting to become a force to reckon with. And DTB had no legacy. So DTB is the Deutsche Terminbörse, now called Eurex. DTB had no legacy of trading floors. They started straight off the bat from, on screen. So the talk of the town, but when I got back from my sabbatical was, well, maybe we should think about moving on screen. And Matif's market share was also starting to get hurt by DTB precisely. So that's when the decision was made to move on screen. And they look for someone brilliant who could speak a bit of English, which was quite rare in Paris at that time in the mid-90s, to help with the transition from an on-screen trading floor environment to an on-screen environment, and to shift the trading operations from the trading floor to the screen. And that's they told me, well, you don't look that stupid. You speak English. You go and do it.
But it's quite funny now thinking back, because of course the Matif was one of the pioneers of exchanges actually going electronic from the very earliest stages. And I mean the Matif had after hours trading
for futures
from the 80s for futures.
Yeah, clearly I believe we were the very first one to do it amongst the big exchanges. I mean, SFE had done it before, even though they had they moved before us, shortly before us. They had a very good trading system in Sydney. I think we're the second largest futures exchange to migrate on screen.
Fascinating altogether. So therefore, when you were developing this career, how come you managed to get into then from the migration business into the building of exchanges business, or the developing exchanges business?
Well, what happened is that so by then Matif had been taken over by the Paris Stock Exchange, SBF. And SBF by then, Société des Bourses Françaises, which is now called Euronext, it was before the merger with the other European exchanges and stuff. It was Paris standalone. And by then, Paris had the best futures trading system in the world. They had just come up with it. It was called NSCVF. And we migrated to NSCVF. It was somewhat successful. Let's say we're a bit like the guinea pig. Matif was the guinea pig, but there was no choice, because otherwise Matif would have gone bankrupt anyway. So we're the happy guinea pig. It was a bit of a roller coaster, but eventually it worked. And, we became the benchmark for futures trading system. So as a result, I had done the migration. I was by chance the very first person in the world to migrate a major futures exchange from, except for SFE again, from open outcry to on screen. So my phone started ringing. And I left the exchange. I did a brief stint with a GL Trade, which was the largest ISV in the world back then. Because GL Trade was in bed with, was partly owned by SBF. So wherever SBF would sell the trading system, it would come with the GL Trade front end. So I did a brief stint with a GL trade, which was extremely useful to get me all the technical knowledge and all that sort of stuff, which I was very poor at. And then my phone started ringing, and the first guy who rang me was a guy in Sydney, Australia, who told me, well, listen, we're setting up a new futures exchange in Sydney. We're trying to give the SFE a run for their money. We're using the NSC trading system, the parish system. Why don't you come and help us do it? So, well, Sydney sounds good. We've got the Olympics around the corner. That was in 2000. And, 2 months later, I was in Sydney.
That was an amazing business. So that was ADX, the Australian Derivatives Exchange, and I presume it was John Heron who gave you the call.
It was.
Is that right? Yeah, and
exactly.
Hello, John. If you're watching today, it's good. I hope all's well with you. And certainly, yes, that was quite amazing. I mean, it was a remarkable starter competitor exchange. You built it from nothing in at that stage, it seemed to be very, very brief period of time. I mean, it was
actually we did it, and we set up ADX in it was ready in 6 months. And then after that, ASIC was, as always, was in bed with the SFE and so on. They did everything they could to delay our license, granting our license. And as a result, our overheads were running crazy.
Yes, that was very difficult. And then you managed to get, I mean, the market managed to get a certain amount of traction, but and ultimately that traction just sort of disappeared, didn't it?
It failed. It failed because for plenty of good and bad reasons. First one was that we just weren't good enough. We made a lot of mistakes, myself included. It was my first shot at launching an exchange from scratch. And I thought all the other guys knew better than I did, and actually they didn't, because we're all in the same position, and we made a lot of bad decisions. But it's as simple as that. And I feel sorry for the people invested in the exchange, because they did lose a lot of money. At the same time, the timing was dreadful. It was just around when the first internet bubble bursted. And as a result, we ended up looking to raise extra capital, and nobody would give us a single penny because everybody got burned by this internet bubble. And at the same time, the competition, so let's be honest, recognize that the SFE did the right move. They demutualized at the same time, and as a result, there was way less of an incentive for the SFE members to go and train another exchange.
Yes, an incredibly tumultuous time in Sydney. I remember it well. I remember visiting ADX offices and seeing you there at the time.
Exactly.
It was epic. You had, I can't remember the name of the chairman now, but he'd been wasn't he a former Melbourne Olympic star?
Yeah, no. He won the, what's his name? Yeah, he won the Olympic gold in Mexico in '68.
Mexico.
68. In track and fields. 800 meters or something like that.
That's what it remembers. I come up with 800 meters or something like that, middle distance runner. Yes, Ralph DeBell was that?
Yes, exactly. Wow, you got amazing.
Wow, that's quite incredible. That's a miracle. I couldn't remember that when I started that sentence, but it suddenly came back to me. Yes, a fascinating business altogether. Okay, so ADX sadly died. So what happened then?
Well, ADX died. Another reason why ADX died is that, we're like a plethoric organization. I mean, for a startup, we had 45 people, which looks like zero sets altogether. And so, I mean, I learned a lot of lessons with ADX. It's a good thing that actually, the first exchange that, I helped set up failed, because, I made sure that I wouldn't make the same mistakes again. So I stuck around Sydney. I helped GL. GL at the same time was setting up an office in Sydney. They called me, so well, can you help us set up the shop? So I helped them. I did that for a 6 months or 9 months or something like that. But just setting up the shop and making introductions into the financial community of Sydney, basically. And after that, when it was time to start selling stuff, they told me, listen, the sales guy, which was quite obvious, so we don't need you anymore. And again, my phone rang. A former colleague of mine at the Matif, who said, well, I'm in Montreal. I'm running the exchange in Montreal, and we've just got this grand plan to set up a equity option exchange in Boston, Massachusetts. And so the Boston Stock Exchange, which was not part of NASDAQ back then, will be the SRO. And the brainchild of the whole thing is Thomas Petterfee from Interactive Brokers, Timber Hill. And there's a grand plan there to totally revolutionize the market model by introducing penny pricing. So can you come and help us? And we're using the same system, NSC from Paris Exchange. So you know all that stuff. Just come and meet us. And that's what I did. I took the plane. I left Sydney in the summer for Montreal in the winter. So it was like 40 or 50 degree temperature drop, and I ended up in Montreal.
I can remember doing that as well once for a Bourse de Montreal road show sometime on single stock futures. I think I left Sydney and it was a balmy 35 degrees above zero, and it was a balmy by the locals comparison, only -8 or something when I landed, and everybody was going, gosh, the weather's so good for the middle of January. And the only thing you could hear were my teeth chattering at the time. Yes, I remember that weather well. So I've forgotten his name now. He was the COO of Bourse de Montreal at that time, to Luc Bertrand, who was the CEO. He used to be at Matif, isn't that right?
Yeah, Philippe Lumeau was the head of strategy.
Lumeau, thank you.
He was the head of strategy at Matif. And he moved on to Montreal. He was the managing director. I think Luc was something about the chairman already or something like that. And back then, Montreal was still separate from Toronto. There were so Montreal was running the derivatives, and Toronto was running the cash markets, but they were totally separate legal entities.
Well, that was one of those incredible pieces of the history of markets, because the Toronto Stock Exchange gave Montreal all of Canada's derivatives, if I remember correctly, or at least all of the equity derivatives, and 50 million Canadian dollars, and said, here, go away, something along those lines. And
yes.
And at the end of it, and there was a 10-year exclusive clause, and 9.5 years or 9 years after, the same team, I do believe, of Bertrand, Lumeau, and everybody else sold it back for like 1.3 billion Canadian dollars to the Toronto Stock Exchange, which was quite a trade.
They did pretty well, I must say.
Yeah, that was pretty impressive altogether. So, okay, so you get on a plane, you go to Canada, and then you were obviously building this fascinating new remote, all electronic options exchange, the Boston Options Exchange box out of the Boston Stock Exchange, which moved you on, I suppose, from VF version of NSC to VO, I suppose, by that stage in advance.
It was a customized version for options. So it was VF/VO. It was doing the job. It reached its limits very quickly when Google listed, Google options were listed. It was just like it stole the whole system, because it was just clearly lacking power. But the real change behind Box was introducing penny pricing in an options world that was still trading good old nickel and dimes. So we had this price improvement process, which was like a 3-second auction, during which market makers could improve prices in pennies. And basically, those were the same pennies that were normally going towards payment for exchange flow, payment for order flow, at the other exchanges. And for us, we're just giving this money back to the investors. And that was quite a game changer. And I mean, when we applied for the license with the SEC, there were hundreds and hundreds of public comments against us, saying, no, those guys are going to kill the business, even MPs, not MPs, but senators and federal senators from Chicago saying, oh, that's the end of Chicago, those guys are going to kill us. It was totally ludicrous.
Well, it's quite incredible, actually, because you look at the American process for approving exchanges, and it's rather like the old medieval concept of running the gauntlet, because you have to sort of run essentially without any armor on through the middle, as you say, of all of these how might one say, heavily incentivized. I hesitate to say that there's payment for order flow in the US Senate, but nonetheless, they're heavily incentivized towards their constituents in Chicago or New York or wherever.
Exactly.
And it was quite interesting because also at that stage, you were really in the pioneering spirit of the electronic options business, because the International Securities Exchange, ISE, had only just effectively launched when you were building and creating Box. And then,
they had launched a couple of years earlier, and they were sitting pretty on like they were the largest exchange in the US for pure equity options. If you leave aside like the index options, whereas CBOE has still got that stupid de facto monopoly, but for pure equity options, they were way ahead of the pack with like a 18 or 20% market share.
Yeah. And therefore, you came in to try and shake that up a bit further. And it's interesting, actually, because when ISE came along, I think a lot of people just wrote it off as a crazy idea that people were going to trade options electronically. And 2 years later, everybody'd suddenly become wise to that idea and thought it was a terrible concept, allowing more electronic exchanges. And also, actually, it's so funny to think about that, because at the time, what was Box? Box was going to be like the 4th or the 5th options exchange in the country. And everybody said, that's way too many exchanges.
No, that's exactly the point. Like back then, people were saying, but hang on, there's already 4 exchanges in the place. You guys are going to be number 5. Do we need 5 options exchanges in this country? And today there's what, 17 or something like that?
Exactly.
I think it's 17. And everybody manages to make a living out of it because it's such a huge market.
Well, it's incredible. I mean, you look at how enormously it's grown. And I mean, one of the things going all the way back, I would have always said that, for example, the Paris market, both at Matif and Monap, were incredible as how they grew options very, very efficiently. And actually, I mean, the Life Exchange, frankly, was not efficient. I mean, if you look at the number of options it traded per futures contract traded, the ratio was always much, much lower. And France had been very, very innovative in that market. But you look at the US equity options market today, I mean, it's just such a leviathan of liquidity that you can see it's amazing. Really.
Yeah, and there's no, it's like even though there's 17 exchanges, there's no notion of fragmentation of liquidity, which is quite, it's beyond belief. But it's also very much helped by the fact that there's a single clearinghouse. So you have total fungibility of the option contract between one exchange and another. You can buy an option at Box and sell it at Philly or wherever. And it's the same option.
Yes. Well, I mean, that's hugely advantageous, and certainly something where it's incredible to look at how relatively poorly a lot of European options exchanges have done over the course of the last 10 years as the American single name options market exploded.
Yeah,
and
correct.
As I always bore everybody, you look at something like Ferrari, and if you want to trade Ferrari options, just don't even bother at Borsa Italiana's opening hours. Wait until you get into the middle of the afternoon and the Americans open, and then suddenly, by dint of its dual listing in the US, race, as is the symbol, their options come alive. And what you could drive, good grief, you could basically drift a Ferrari through the middle of the bid offer spread all morning in Milan without a problem, and in the afternoon it's wafer thin in huge liquidity.
Yeah. So no, I mean the options business in Paris was very good. It was but it was also thanks to a very large community of English and American traders who did a lot to make it a very efficient market.
That's true, but I think also we have to really praise a lot of the homegrown French banks, because they did adopt options with gusto, and there were a lot of remarkably talented doctors in pointy-headed mathematicians, practices in physics and good grief, whatever.
Yeah, the guys from the Grande École and stuff were they were geeks ahead of their time, if you will.
Yeah, and I mean, actually, I mean, a lot of them ended up feeding the London market, because at one point in time, I think half the Japanese banks in the late 1980s were actually being run by Frenchmen, predominantly on the options desk. So there was that thing, and also then there's that amazing sideline. I mean, you mentioned GL and their global ambition and taking over huge amounts of the ISV market, but you look at specialist options software, and actually so much of it traces its way back to the Paris market, whether it's the likes of, say, a Murex, or I can think of half a dozen other names that all came there. Yeah, it's quite fascinating. So Box, so you built Box. How long did you stay after Box had opened then?
Well, I stayed with Box for 5 years. So I helped up. I mean, again, I don't build stuff on my own. I mean, there's always, it's as part of a team, it's a teamwork. So I stayed there for 5 years, and I mean, the business was really good early on. Then the SEC introduced the penny pilot. So obviously our edge was sort of gone, because we weren't the only ones to potentially allowing penny trading. So all the major option classes were trading pennies by then. So our advantage was sort of gone. There was a new management. I wasn't necessarily, in good terms with the new management, and I just wanted to move on. I thought I had done my days in Boston. Boston is a great city. I loved it. I had a great time there. I had 2 kids that were born there, so I still keep very fond memories of Boston. But then again, my phone rang. And he's a guy who used to be in charge of the BSX, the Boston Stock Exchange, before they went bankrupt, and tried to just before they went belly up, they tried to move a full-on electronic using the parish system as well, and it failed, and he moved on to London to set up, guess what, Turquoise. And he calls me, so well, listen, we've got this brand new thing happening in London. There's MiFID, the whole thing is opening up. Everybody can open up their own exchange, yada, yada, yada. And we've got the 9 largest investment banks in the world. We're setting up Turquoise. They're behind us. Just come and help us set up the shop. And that's it. 3 weeks later, as soon as I got my bonus check from Box in the bank, I resigned, and I was on the plane to London.
And so you arrived in London, and again, I mean, that was a fascinating frontier point in the exchange business, because suddenly all these platforms, the competitor platforms, had exploded because of the upcoming MiFID. It must have been really interesting, because I mean, you were building something as part of your team at Turquoise, along with, gosh, there were half a dozen or a dozen similar projects just in London.
Yeah, well, there was Chi-X was already live by then. So clearly they had an early bird advantage, and they were already sitting pretty on 18% pan-European market share. So there was us, there was BATS, there was Euronext had one called whatever pool, Eurex had one, there was the Hungarian one. There's just every man and his dog was trying to set up an MTF back then.
Quite incredible. Yes, you've got me now. I'm trying to remember what the name of the Hungarian one was. That's
Quote MTF.
That was it. Quote MTF, and I think the Euronext one was not Smart Pool.
Smart Pool, yeah, got it.
Pool, yes. Guys, we're trying to fill in this. Fantastic bingo card of MTFs gone by with Olivier Gueris today. We're talking about building markets all around the world. Yeah, really, really incredible to think of all of these different kinds of markets. They mostly had different models, and they all ultimately added something to the marketplace, although a few of them disappeared. But obviously then Turquoise eventually would get absorbed into the London Stock Exchange.
Well, Turquoise was basically, when you get the 9 largest investment banks in the world telling you, we're going to set up a new exchange to try to improve things, I mean, don't trust them, obviously, honestly. They're just here to make sure the incumbent exchange, the LSE or Euronext, the primary exchange, lower their fees. That's all they're interested in. I mean, you find out quickly. Nevertheless, it was a very interesting experience. The good thing about Turquoise, it was quite innovative as well, because there was this combination of a lit order book and dark order book, and you could win the same order book. You could have a lit orders trading with dark orders and that sort of stuff. And we had the folks from Cinnober providing the platform, and those guys were really sharp. The matching rules in the dark pool and the combination of lit and dark order books were so complex, just to make sure you get the best price improvement as possible. It was it was very, I mean, to me, I learned a lot there, I must say. It was it was humble pie for me. It was my first experience at cash markets because I was a pure derivatives guy, and I thought like, you know, stupidly that cash markets were easy, and that's when, you know, I realized that it's not that simple.
Well, you wouldn't be the first person to think that. I mean, I think we can safely say Bob Greifeld thought that when he bought eSpeed, and then ended up having to write most of it off a few years later. I mean, it has become quite a few people who come unstuck.
Yeah.
It's very interesting. I mean, advanced equity cash markets, what always fascinates me is how mind-bogglingly complex they are for a binary process.
No, you're right. But I mean, you know, in hindsight, Turquoise was a shooting gallery. It was just like you had market makers who were like market makers from the 9 shareholders had such a stringent market making scheme that there's no way they could make money out of it, because the goal of the market making scheme was to get Turquoise to 5% pan-European market share within 6 months. So those guys had to quote such tight spreads that you had all the HFTs, like, you know, waiting for them and just picking up their quotes. So that's why it was a shooting gallery. There wasn't a single genuine order in there coming from a fund or anything like that. Maybe in the dark pool was different. But in the lit order book, it was just a shooting gallery. And as soon as the 6-month market making scheme was over, because it had a lifespan of 6 months, all the market makers said, well, listen, we're out of it. We're not doing it anymore. We lost too much money. I think only SocGen, for whatever reason, managed to make some money out of it.
Interesting. Perhaps SocGen being again an example of the very shrewd people from Paris who'd been populating the options markets and elsewhere all those years earlier. Who knows? Quite fascinating.
And so back then, I mean, well, that's why I got the call from Qatar. But I mean, Turquoise was virtually bankrupt, let's face it. And that's when the LSE stepped in, said, well, listen, you know, well, LSE had just had Baikal, who failed as well. So they were looking for an alternative. They said, listen, well, we'll buy Turquoise as long as the 9 guys stay on board. You know, we're not going to buy their stake. We'll buy part of their stake, but we want to make sure they stay on board. And that's how Turquoise became successful. So the LSE, with, you know, it's like, it's a distribution network and that sort of stuff, plus those 9 founders still on board.
Very interesting. And yes, you presaged what happened next. And I suspect it might have been perhaps a call via Paris that came to you that took you to Qatar.
Yeah, exactly. So again, my phone rings. And it's well, somebody I owe a lot to is Roland Bellegarde, who was like the senior executive vice president, whatever, at Euronext. And Euronext back then, I just signed a strategic agreement with the Sovereign Wealth Fund of Qatar to sell their technology and upgrade the exchange. So he calls me, says, well, listen, you like traveling, you like new places, you like setting up new exchanges. That's what I've got. So, well, let me think about it. But then, you know, I went back home, spoke to my wife, said, well, let's go and do it. And I mean, it took a while to get there because, like, you know, the contract discussions and that sort of stuff. But the next year I was there. I was in Doha.
And so Doha, that was a slightly different situation, although you were going through quite an aggressive period of modernization, because that was really coming into the time when Dubai first tried to get its whole financial center together, and Qatar was therefore very excited to be part of that vanguard.
Yeah, well, no, but the IFC was slightly different because it was under common law. Was the exchange in Doha was under onshore law. It was more like a DFM, Dubai for Financial Markets in Dubai. No, the name of the game in Doha was to upgrade the technology, to come up with new products, you know, like securities lending and like that sort of stuff, margin trading, and ultimately to upgrade the not the exchange, but the country, because that's how it works, from frontier to emerging market, which we managed to achieve.
Which brings us then, so we rapidly accelerate through Qatar. You brought it up to from tier 2, tier 1. You made a huge amount of improvement across the market with the team, of course. And then the next step is somewhere that, even by the standards of where you've been so far, I think everybody could say was a little bit foreign.
Well, listen, when I left London for Qatar, I love people writing to me or to, like sort of weird comments. You know what you're doing, or what are you going to do there, right? And the same people, like, 6 months later, were sending me their resume saying, well, can you land me a job there? And so I always thought that there was a real opportunity in Qatar. And I felt the same about Kazakhstan. I mean, I've always had this attraction for Central Asia, like the Silk Road, all this, history about it. And when I knew my time in Qatar was sort of a downer, because obviously they were Qatarizing, as we say, my job. They were kind enough to offer me another job into risk management, which it's not my type. I want to be right in the action, and risk management is too much like wearing slippers to me. And I heard about this thing happening in Kazakhstan, setting up the financial center and the common law, yada yada yada. And I asked a few people, like Roland, again amongst them, to introduce me to the people in Astana, and that was a deal quickly done again.
Very interesting. So you've now been in Astana for how many years?
5.5.
Wow. And how much has when you arrived, it was really quite a bare bones international financial center that was being built up. But obviously the big difference is English common law, right?
Yeah, that's a key difference. I mean, it makes life so much easier. Let's face it. It's like, the key difference between common law and onshore law, wherever you are, is that under common law, whatever is not clearly prohibited, just go and do it. And we'll tell you if we have a problem with it. That's how regulators deal with common law. And it makes life so much easier. That's how we're able to set up the CSD from scratch in Astana in 5 months, basically.
Yeah, quite incredible. You look at the amount of stuff that you have actually built in the Astana exchange in Nur-Sultan. You've got a full suite front to back. And now I believe you're actually looking, there's been a project meeting recently that they're looking to get into the futures business as well.
I'm not aware of that one. Listen, there's always a whole bunch of projects at the financial center. Within the exchange, with AIX, we're busy enough trying to improve the liquidity of the market right now. The reality in Kazakhstan is that most of the business in the blue chips is in London. It's the GDRs at the International Order Book in London. That's where 90% of the business is, if not 95%. And our goal is just to try to build some liquidity within the domestic market. And that's hard enough to start looking at derivatives. Now, I know that within the financial center, because there's a lot of other businesses and pillars under the financial center, yes, there are people looking at commodities and derivatives opportunities.
Very interesting. And so therefore, AIX itself, you're in the epicenter of the Nur-Sultan Financial Center. What's that financial center like? Because I think it's one of the few places that quite a lot of us have not been to yet.
Well, you're welcome to visit, maybe not in winter, but at least in summer. It's not called Nur-Sultan. Again, we reverted back to Astana 3 weeks ago. And it's, initially, it's Astana AFC is on the site of what was the World Fair, the International Expo in 2017. So it was built on purpose to host the International Expo. and just to make sure it doesn't become like how you call it, white elephant, dead elephant, like some, like a site that only used for one event. The long-term idea was always that the site of the expo would be moved, shifted, turned into the financial center. So after the expo ended at the end of the summer 2017, all they had to do was to refurbish the pavilions, to convert them into a proper use for the financial center. And we've got, I must say, the best office space I've ever worked in, any exchange I've worked for in my life.
Well, that's something. I mean, that's quite impressive, given the fact you've had some lovely office space in CBD in Sydney and all sorts of other places around the world that were quite fascinating over the years. So, I mean, in Astana, and I stand corrected, I had read that the name was likely to be changed. I hadn't realized that, good grief, that the settlement period on changing the name of Astana to Nur-Sultan and back again, both times it settled faster than a lot of like French government bonds in the 1990s. Exactly. From what I can see, it's quite incredible. Truly an achievement. It's quite incredible. I remember those guys that used to sit in the Palais Brongniart, and they were often in one side room somewhere, which I honestly couldn't tell you how you find them. I just remember being dragged around there by a broker one day. It was a quite remarkable position. So you've been on 4 different continents. You've been directly involved in 6 or 7 different market builds where you've been playing a leading role. And of course, as we know, it's all a big team business in order to get forward.
Yes, it is.
Is there one core lesson or core thing you can take away in terms of building exchange markets that you've learned? Or are there several key messages?
Well, first of all, I mean, make sure that, I mean, you said, I like the title of the show today, like building better markets around the world. That's very flattering. Thank you very much for that. But okay, everybody wants to build better markets, but why do you want to build better markets? Why is it going to be better? And that's what you need to think about. Do you want to introduce competition where it's not, where there's no competition? Do you want to improve the offer? Do you want to improve the market model like we did with Box, with the penny pricing? Do you want to take opportunities of niches that exist in a monopolistic environment, for example, or in a same thing where when OM was taken over by NASDAQ, or when Euronext was taken over by NICE, it created a lot of opportunities for niche players. And that's also something that we're trying to achieve with Wethaq, in KSA, whom I advise. So you need to really think, why is my market that I'm trying to set up going to be better? What's the added value I'm going to bring into that? And unless you get a clear idea of that, I'm not sure you want to, get involved into setting up a new exchange.
That is a great point. That is really, really well made. Which is, you need to find your niche, and you need to make sure that it's a niche that's going to be sustainable. Now, I think that raises 2 quite fascinating questions, because one thing I would observe is, I mean, when you were building the ADX, Australian Derivative Exchange, in the late 1990s, I mean, the numbers to create any sort of a new exchange were fairly eye-popping, because the technology was incredibly expensive. And I'm not trying to deprecate Euronext.
No, you're right. You're absolutely right.
The NSE was a great system, but it was just incredibly expensive.
Yes.
Whereas you look at it now, and I mean, the technology is so flexible that you've got a suite of different possibilities that you could create markets from.
Correct. No, it's true. Now it's much cheaper to set up trading venues. I mean, clearinghouses are like totally different breed. But anybody can set up a trading venue. I mean, look at all the crypto kits and stuff. Except, I mean, their trading venues are fake. I mean, the volumes they display are fake. But other than that, I mean, to set up a trading venue is that simple these days.
Yeah. I mean, I think it's quite fascinating. And obviously, although the only difference, I suppose, is they've become cocooned in a lot more regulation over the course of the last 20 years, but it's nonetheless, it's still feasible to manage to work your way around it and plan your way through it. So, I mean, finding your niche is absolutely key. I suppose one of the other issues, I mean, you've alluded to it, fundamentally, there's an advantage to being in a common law system.
Yeah, definitely. I mean, I've experienced both. So, you know, I mean, again, like when I was talking, when I'd be speaking to the regulator in Qatar, it was onshore. I wasn't under the financial center in Qatar, I was onshore. And the regulator would tell me, you know, if it's not like clearly allowed, you need to come and ask me if you can do it. So, whereas like, you know, common law is the other way around. If it's not clearly forbidden, just go and do it. And I'll come and tell you if I have a problem with it. And also, I mean, by definition, it's a legal environment that's recognized around the world, that everybody's familiar with. That like that's also I helped us set up AIX. I mean, and the IFC. The IFC is a copy and paste of the IFC in Dubai. And the IFC in Dubai itself is a copy and paste of a Singapore financial center, and all that's built under the common law. So you know, why reinvent the wheel?
Absolutely. And we've seen since then also other parallel things. Well, alongside DIFC, you've got Abu Dhabi Global Market and all these other sorts of enterprises which are trying to do the same sorts of things.
It's a no-brainer.
Yeah, it's a no-brainer. So you got to find your niche. You got to have common law would be an ideal thing. The technology, the gubbins, the ability to build exchanges is certainly an awful lot cheaper than it once was. And I think, I mean, a good example of that actually was just the other week when we had Kevin on from A2X. And I mean, he's doing what, 45% of the secondary market volume of the Johannesburg Stock Exchange equivalent. And he's got 12 people. Like, okay, he doesn't have a clearinghouse, he doesn't have that. But even so, that's a pretty awesome headcount to manage to get away with those sorts of numbers in terms of execution.
Now you need to find the right balance between what you can outsource and what you can do yourself. And I mean, same thing. You remember I mentioned that ADX had way too much stuff, and there's like 45 of us, something like that. And when we launched Box, I mean, there was 8 of us in a phone booth, basically.
Yeah, well, that was on one of the things I was going to say was, I mean, Box was notoriously parsimonious, even compared to the ISE, which itself, I mean, the ISE, what dominated the US single name options market, never got a headcount much above a couple of hundred people. And at the same time as there were 6 or 7 times as many people working for rivals. And Box, I mean, Box got up to, I think, about a dozen people at one point in time, and it's most cataclysmic in its early incarnation, which seemed to be huge for the whole operation. So you've got, I mean, looking forward, are you like me? I mean, are you optimistic that there are lots of other new niches that can be discovered?
Yeah, definitely. Exchanges? We don't know them yet, probably, but like I think, and that's what that'll be one of the drivers of the next installments of the capital market revolution, is that there'll be like a securitization of pretty much everything. Like maybe not everything, but you know, there's a lot of stuff that will be securitized so that it can trade in a regulated environment. And you know, I think about trade finance. I think about like non-performing loans. I think there's like a whole bunch of new commodities. Like that's to me that's the key to the future. It's like a securitization of pretty much everything under the sun, so that it trades under a regulated environment.
And I think that's one of the important things which goes with the common law. You've got to have the regulated market in order to manage to make that all work. So therefore, you're looking at the securitization of everything into the future. I think you've almost preempted the last question, but is there anything else you want to add about where the revolution, the capital market revolution, the revolution exchanges goes next?
Frontier markets, the last frontier. I think there's still like, you know, there's what, like 25, 28 countries in the world that don't have a stock exchange. That's where the future take place. And also, like, you know, it's still largely untapped areas in Africa, in Central America, Central Asia as well. So that's why I see massive potential for growth.
In 2 sentences, you identify a bear 2 to 3.5 billion people who don't have a stock market between them, or insufficient markets, further securitization of markets, the growth of that whole enterprise. I think it's absolutely fascinating. And that's why I'm so delighted to be able to talk to you this evening, Olivier, because you and I, we share a passion for building new markets. We want to see the exchange model expand. We're capital market revolutionaries to the core, and it has been absolutely a joy to have you today on IPO-VID number 80. Thank you so much for joining us. We're going to be back next week. We're going to be back on technology, from talking about building markets all around the world with Olivier Gueris. We're going to be joined by Mac Gill, and we're going to be talking about delivering new parish technology. A very interesting dovetailing of the topic. Looking forward to that next week. In the meantime, ladies and gentlemen, don't forget you can get the daily bulletin of the Bourse Business every day. Exchange Invest. Just hit us up with a direct message. We can start you on a free trial. If you're not already a subscriber and an avid reader along with the world's leading bourse builders like Olivier Gueris. Ladies and gentlemen, my name is Patrick L. Young. Thank you, Olivier, for that great show in the middle of the night from Sydney, but still elucidating us with so many illuminating points. My name is Patrick L. Young. This has been IPO-VID number 80. Catch you again next week, same place, same time.